Hi everyone, welcome to the Buffett and Beyond Research Saturday Stock Market Recap. This is September 14, 2024. Yeah, we're halfway through September already. Don't forget that if you want a full free month subscription to any of these videos that we have, we put out 3 a week, 3 different videos on a Saturday. You get the 3 videos, and on Tuesday, Wednesday, Thursday, and Friday, you get a letter on the market and timing the portfolios. All we need is your name and email. We want you to get a free month subscription so you can see what we're all about. All you have to do is go to buffettandbeyond.com. Buffett is spelled with 2 F's and 2 T's, buffettandbeyond.com, and give us your name, your email, and you'll start getting a full month free subscription to our letters. And let's see what the market did this week. Well, the market came roaring back after the first week in September, which was last week, which began the weakest month of the year in true fashion. However, with the Fed meeting this week and the CPI numbers coming in good, PPI numbers coming in good, so the Fed is expected to begin lowering interest rates this coming Wednesday. And the market is ready to roll once again in anticipation of a good run into the end of the year, even though September is usually the weakest month of the year. Now, our weekly stock analysis video, well, we look at Adobe, which has been good to us in the past, but boy, oh boy, it seems to be losing its luster. Hey, let's take a look. And our ETF video, well, this past week has been the opposite of the first week of this month, and our portfolios have come roaring back and gave us a lot of spending money for the weekend. So, folks, go out and enjoy it. And let's look at the S&P 500 first, and we can see that down here the market proved to be weak, and it came roaring back up to almost to the top of this band, and then started just doing nothing for 2 weeks in here, and then fell pretty drastically as we came into September. And now all of a sudden we tested that bottom band again on Wednesday, and the market hit that 20-day moving average, which is this line right in the middle here, bounced above it, and now on Friday stayed above it. Now, what's so interesting about Fridays is that if the market feels that it can go into Friday buying stocks, so we look at whether the market closes up or down on a Friday. So if the market participants are buying stock on a Friday, that means they're pretty secure with themselves and their positions, and that the weekend won't hurt the market at all. So those are the traders, and then people following that Friday movement will also begin to get into newer positions. So we got into positions way back in here, and this was last week, not the past week, but last week we got into this market because we see the market, or we saw the market, and now again, this is the S&P 500, but we saw it on the QQQs, kept testing this area here for 3 days in a row, and then on Wednesday it really tested by going below it, and then once it started coming back, we said, okay, this is a good move in the market, and we put any extra money that we had in the market in during these days, which has proved out to be a very good move. So now we're here, and is this market going to go up to test this top line again? We think it is, and it might play around a little bit on Monday and Tuesday, but the market participants think that the Fed will lower interest rates on Wednesday, and it will begin a whole new cycle once again. We're still in the weak part of the year, which is September, so there's a little fear going on there, but boy, oh boy, Friday did not show that fear. Now down here, we have this blue line coming up and going above, just slightly above this red line, which is giving us a buy signal. If this closes above, and it looks like it did, I mean, we're really close in here, so if we get positive Monday and Tuesday, and probably positive Wednesday when they lower interest rates, then we get that buy signal in here. And when we look at the Dow Jones Industrials, we are looking at this previous top in here, and then we went above it over in here, and boy, it looked like we were going to be off and running, and then all of a sudden we had a couple of down days in here and another correction down to the 50-day moving average. So we watch all these three averages down to the 50-day, went below it, and this is on Wednesday again, and then closed way above it at the top. That was about as I remember, almost an 800-point move in the Dow, because it was down over 700 points, closed up about 124 right in here. Very, very nice move. And here's that signal once again on the Dow. It hasn't crossed over yet to give us a buy signal, but boy, oh boy, it looks pretty good. And then when we look at the S&P 500, we want to see that previous top in there, and boy, Monday, Tuesday, even Wednesday, if it brings us above that top for the third time, or third time is a charm, plus we have this indicator down here starting to move up. Now, come back up here, we're a little bit overbought, but we have a little room to run in here before we get any kind of sell signal or topping action. So we kind of think that this market is going to break through this top here, make a triple top, and break through it to the upside. At least that's what we're hoping, aren't we? And here's the QQQs. QQQs are the weakest because they have the tech stocks and the semi, but boy, oh boy, have they come roaring back this week, haven't they? Very, very nice. And we have the buy signal down here. So that's nice. The only problem is these green vertical lines are volume, and the volume has dried up toward the end of the week. We don't like to see that. We would like to see heavier volume on these as we go along and the market continues up. So we'll have to watch this, and that could be because of the anticipation of the Fed meeting this week. And when we look at portfolio protection, yes, we still have 3 SPY put options, and the SPYs are 1/10 of the S&P 500. This is about a $140,000 portfolio, so we have 3 put options, and we will be rolling the September option over this week into December, just to make sure we don't get any corrections in here. And these put options are about 12% below the market, really for disaster insurance. Those of you who don't want to play with hedging on, hedging off, or have your portfolio managed, you want to do it yourself, be able to sleep, not a bad strategy. But we use the hedging techniques, the trading and the hedging, to gain a few points during the year just to pay those management fees. So why not have somebody else do it for you, and you actually get your management fees, I don't want to say for free, but usually, and most about all the time that we've been involved in the market, trading a little bit with the hedges allows us to gain a few points during the year to pay for those management fees, get you a few extra bucks, and of course we like to think that for every big downturn we are protected, not for the entire portfolio, but for at least part of the portfolio, 30% of the portfolio. So we have a little bit of extra money at the bottom, and we can buy more stocks if we get a big enough correction. Yeah, we don't want to be involved in that big correction at all without being some kind of hedged, either with the put options or with trading the inverse ETFs that we talk about in our daily letter. So, folks, we had a great week this week. We had 5 out of the past 6 Fridays closing up. So market participants are very, very excited about this market. And if you want to walk on this beach like Jimmy Buffett once did and see the reflection in this pool down here, the reflection of the rising sun, you want to walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. All right, folks, you go out, have a nice weekend, be with your family, Sunday dinner, stay safe, and we'll see you back here with our Tuesday morning letter.